Hello, class. Chapter 10, Part 2. The exceptions. Vehicle cannot be used for personal use. So the example is a truck specially fitted for carrying parts and tools and has little seating space. Luxury auto limits do not apply. Vehicles that are less than 6,000 pounds but built on a track chassis will have higher limitations than a luxury auto. Amortization of intangibles. You have goodwill, Section 197. Computer software, organizational expenditures, Section 248. R&E expenditures was Section 174. Startup expenditures, Section 195. And pollution control facilities, Section 169. The 197 intangibles are amortizable over 15 years using the straight line method starting with month of acquisition. Section 179 applies to intangibles that are acquired, not created. Treated as a Section 1231 property if held for more than greater than 1 year, and it's subject to Section 1245 recapture rules. No loss is recognized upon sale of one intangible if some or all of the other intangibles acquired at the same time are still being held. Base of retained intangibles are increased by the disallowed loss. Goodwill and going concern, customer lists, suppliers, information base. You have licenses or a permit granted by government, covenants not to compete, and franchises, trademarks, and trade names. Research and experimental expenditures, which are R&E, includes experimental and lab costs incidental to the development of the property. Possible tax treatments, you can expense in the tax year paid, capitalize and amortize over 60 months, capitalize and write off only when the project is abandoned or becomes worthless. Development software, you're going to expense as incurred, or you can capitalize and amortize over 60 months. You can purchase software, depreciate straight line over 36 months. If part of hardware purchase, it's 5 years. Makers, leased or licensed software, deductible in full in the year paid. So on this chart, we're talking about depreciation, intangibles, drillings, and developmental costs. You're going to have payments for mineral interest, so that's going to be depletion. You're going to have intangible drilling and developmental costs. You can capitalize or expense. Tangible asset costs, makers depreciation, and operating costs during production. That's going to be a Section 162. For tax planning considerations, you have ADS instead of makers, UOP depreciation, or business combinations. Compliance issues form for 4562. So the 4562 is what we're going to discuss. That is the form that you're going to use to show the depreciation for your assets. You're going to have depreciation, depletion, or amortization. So as you're looking here is a picture of your 4562. And that concludes our Chapter 10 Depreciation PowerPoint. Thank you.